Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks whipsaw after the Pentagon blacklists games company Tencent and battery maker CATL for alleged links to China's military. Nvidia unveils new chips and software to stay ahead in the race for AI supremacy. Asian semiconductor stocks surge, extending Wall Street's tech rally. And Canada's ruling party begins the search for a new leader after Prime Minister Justin Trudeau steps down. Former Bank of England boss Mark Carney says he is considering a run. So it was the tech momentum that fed into the gains on Wall Street last night. Gains of a little over 1% for the Nasdaq 100. Gains of around 0.5%, close to 0.6 for the S&P 500. You saw the upside coming through for European stocks in the session yesterday, close to 1%. The picture, though, today, in terms of the handover to Europe, a little soggier. Currently, futures in Europe pointing lower by 0.5%. We have data on the inflation front later today. That could inform views around the next steps for the ECB, with markets expecting another cut from the European Central Bank later this month. The FTSE 100 futures pointing lower as well, down 0.4%. A really important auction and sell-off of gilts at the 30-year level later today, which will test the markets as yields are above 5%, comfortably above 5% on the long end here in the UK. S&P futures then pointing a little lower, down 0.1%. Nasdaq 100 futures also off by 0.2, maybe at a profit-making after the gains that came through, profit-taking after the gains that came through yesterday. Some of that powered, of course, by expectations around Nvidia. We've had more details from Jensen Huang on that, and we'll unpack that story for you. Let's flip the board, look cross-asset. We've heard from Lisa Cook of the Fed, again reiterating what seems to be a consensus view coming through from FOMC officials now, that there is need for caution in terms of next steps on rate cuts for the Federal Reserve. 460 right now on the benchmark US 10-year. Bit of money moving into Treasuries after yields, of course, spiked higher in recent days. Currently yields down 2 basis points. The Japanese yen in focus. The finance minister came out and said that they were focused on FX moves, irrational, quote, irrational moves. 157 right now on the Japanese yen, pairing some of the heavier losses, just down 0.1% versus the US dollar. Brent at $76 a barrel. Bitcoin back above 100,000, currently at 101 on gains coming through for the crypto space. Let's get across right now on what's happening in the Asian markets. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing Asia stock gauge running higher today, but it's a mixed picture. If you look under the hood, the chip names are doing well. This is thanks to Jensen Huang and Nvidia, the likes of Tokyo Electron surging 11% and helping the Nikkei to these outperformances, as we see the bank stocks also lifting the gauge, also helped along by the export-related counters given the weak yen. But if you look at what we're seeing on the Hong Kong benchmark, it's really the underperformance as two of the biggest stocks in the Greater China region, Tencent CATL, get put on the U.S. Defense Department blacklist. They've, of course, since denied any links with the Chinese military, but Tencent stock down to the lowest level since mid-September, and it's a benchmark heavyweight, so it's dragging the Hang Seng. It's responsible for that 2% decline you see there. Flip the board. Let's rake through what we're seeing in the Japanese yen. Today, it hit its weakest level against the greenback in 6 months. Some of this was blamed on portfolio repositioning, and it is approaching some of these levels which last drew intervention from Japanese authorities. Suddenly, we got some jawboning from the Japanese finance chief, as you mentioned a short while ago, but it looks like the direction of travel still for dollar yen is higher. Tom.
Avril Hong in Singapore. Thank you very much indeed with a check on the Asian markets. Now, the race to replace Justin Trudeau is on after the Canadian Prime Minister said he is resigning after more than 9 years in the job. Former Bank of England boss Mark Carney says he is considering a run. Other potential candidates include Chrystia Freeland and Dominic LeBlanc, who replaced her as finance minister. Trudeau will remain as Prime Minister until a new leader is selected, with Parliament suspended until March 24th, while the process is underway.
I have always been driven by my love for Canada, by my desire to serve Canadians, and by what is in the best interest of Canadians. And Canadians deserve a real choice in the next election. And it has become obvious to me with the internal battles that I cannot be the one to carry the Liberal standard into the next election.
Right, for more on this, let's bring in Bloomberg's executive editor in Canada, Derek Decloet. So, Derek, the speculation had been there for a long time, a number of weeks, number of months, that Trudeau would ultimately be forced to step down. We're at the point now we're thinking about who replaces the Canadian Prime Minister. Who is most likely to step into the breach?
Well, the biggest names in this race are obviously two. Mark Carney, as you said, the former governor of the Bank of England, former governor of the Bank of Canada, a man with a big reputation around economic issues. And the other really big name in this race, potentially, is Chrystia Freeland, the former finance minister, the longtime deputy prime minister, who really set the ball in motion for today's events when she resigned right before Christmas and said she was at odds with the prime minister and that the prime minister wasn't taking the threat of a trade war with the new Trump administration seriously enough. That was a blow from which Trudeau could not recover. And Freeland, because of her long standing in the Liberal Party, is if she chooses to run, going to be a player. There are some other players too, though, within the cabinet. There's the foreign minister, Melanie Joly. There's Dominic LeBlanc, the replacement finance minister, who stepped in and is a longtime Liberal and a friend of Justin Trudeau. And a dark horse candidate is the former Premier of British Columbia, Christy Clark, a little less well known, but somebody with a reputation within the country.
So, Derek, those are some of the key contenders and their backgrounds. What are you and the team watching for in the days and weeks ahead? And to what extent will some of these candidates be considering that maybe this is a poison chalice, given the poll lead versus the Conservatives?
That's right. I mean, there's polling out there taken in late December that shows the Conservative Party something like 25 points ahead of the Liberals. That is a mountain to climb for anybody. So it's going to be, and there's not a lot of time to put your own stamp on this government. I mean, it's highly likely that we will have an election by May. So a new Liberal leader, a new prime minister, will have only weeks to sort of establish, what they want to do before being thrown into an election campaign, possibly. So the Liberal Party needs to have its contest quickly, and these candidates are all going to have to decide very quickly whether or not they're in or they're out, because there is not a ton of time here to set out a platform and a message and try to rebrand the Liberal Party as any new leader would have to do.
OK, excellent. Bloomberg's executive editor in Canada, Derek Decloet, on the details there as we look to who will replace, of course, the outgoing Canadian Prime Minister Justin Trudeau. And a disclaimer as well for our audience. Bloomberg's executive editor, of course, was speaking to us. Mark Carney is the chair of Bloomberg's board of directors. Now, traders are grappling with the prospect of rising trade tensions, and that was one of the factors, of course, that led to the downfall, arguably, of Justin Trudeau, after President-elect Donald Trump denied a Washington Post report that he is considering a more targeted approach to tariffs. He came out and denied that report. Let's dive deeper into the market reaction with Bloomberg's Valerie CATL. So a reminder, Valerie, of the whipsaw effect of speculation around Trump's policies.
That's right, Tom. What a whipsaw we had, especially in the FX market yesterday, around these headlines about Trump tariffs. The original market reaction to that Washington Post article on the limited scope for tariffs saw the dollar really erase a lot of its gains. And against that, the euro took a big leg stronger versus the dollar on those original headlines, moved to over 1%, which, Tom, I think shows that there was a lot of euro shorts out of there that got squeezed yesterday. We even had some reports from traders across the street talking about the surge in option volumes. A lot of those traders who piled into euro shorts already seemed to getting stopped out over these headlines yesterday. But it wasn't just the tariff headlines we had to deal with yesterday. We also had to deal with some headlines about resignations when it comes to the Fed. If we flip on, we can just talk about the reaction to bank stocks. We had news from the Fed that Michael Barr is stepping down as the vice chair for supervision. That saw bank stocks rally nearly 2.5% yesterday intraday. Michael Barr is known as being very tough tough on capital rules, and his resignation maybe opens the door for looser regulations going forward, and bank stocks did cheer that news. Now, later today, Tom, we also get some more news out of the U.S. This time it's on the jobs market. We get the JOLTS job openings data out around 3 o'clock this time, along with ISM services. Keep an eye about how many job openings per unemployed person, that ratio that the Fed keeps their eye on. And lastly, I want to talk about, Tom, this rise in yields that we've seen in the long end. It's not just in the U.S., but the move has gone global. We've seen rises in the UK long end, and overnight, JGB 30 years also hit a new high they had not seen for 25 years.
Yeah, the UK 30-year settled at 5.17, close to 5.18, so closing in on levels that we have not seen since, 2023. Bloomberg's Valerie Titel, thank you very much indeed. Let's get to one of the big corporate stories of the moment then. Back to Nvidia, where the CEO, Jensen Huang, has announced a raft of new chips, software and services aimed at staying at the forefront of artificial intelligence computing. Huang presented the new lineup during the CES show in Las Vegas.
We used GeForce to enable artificial intelligence, and now artificial intelligence is revolutionizing GeForce. Everyone, today we're announcing our next generation, the RTX Blackwell family.
OK, let's cross over right now to Bloomberg Technology anchor Ed Ludlow, who joins us from Las Vegas. Ed, this is a company you know very well. This is a CEO you've interviewed a number of times. Talk to us about what he outlined at CES with a particular focus on that new graphics card.
Yeah, it's kind of Jensen Huang and Nvidia going after everything that's left in the world of AI, going back to their roots. This is a company whose history is in gaming GPUs. So if you're an absolute nerd that likes to build your own high-performance computer at home, you'd likely have an Nvidia GPU. We've got very used to the idea that Nvidia is the sort of sole at this moment in time provider of high-performance GPUs in data centers that train AI models. And what they announce and what the images you're showing on the screen to your audience are them taking that work and making very high-performance GPUs for the consumer and for developers that are a fraction of the price of the prior generation. And it almost kind of like diversifies revenue, because right now data centers like 100 billion for the full year, gaming's 12 billion. But in a future where AI is everywhere, I think Huang's got his eye on other markets.
I mean, it's really fascinating, isn't it, as a diversifier? I mean, does that speak to concern for you amongst Nvidia that maybe it's overly exposed to those data centers? And what more? I mean, this is a key test, isn't it, for analysts in terms of what Huang has to say about the push out into other segments when it comes to those AI accelerators and the demand.
Yeah, it'd be interesting to see kind of what mood Wall Street wakes up on tomorrow, whether they got any of it. You know, it wasn't very much focused on this is the brain that trains the AI model. It was everything else. But I guess the pitch that Jensen Huang has is that the next phase of AI is in the physical world, robots, self-driving cars, etc. Right now, Nvidia has a hold in a corner of that market, which is that the data centers are being used to train the underlying models, the AI models that support that technology. But there are many more steps to come to build robots that can actually do things. And they're starting to show us through new models. For example, they announced one called Cosmos, which they call a world foundation model, better ways of taking data other than text, so image, creating synthetic data, and finding ways to make things actually useful. And I'll speak to Jensen tomorrow, and I'm going to sort of zero in on that, because the addressable market for NVIDIA hasn't really been sort of quantified by him. Where does that lead them? What's their go-to-market strategy for that?
Yeah, a key question. Bloomberg's Ed Ludlow, thank you very much indeed. Joining us from Vegas, of course, at the CES. And later today, as Ed mentioned, he will be speaking with Jensen Huang at CES in Vegas on Bloomberg Technology. That is at 4:30 p.m. UK time. So, of course, tune in for that interview. Here's what else to be thinking about in the day ahead then. 7:45 a.m. UK time. We're going to get inflation prints from France. At 10 a.m. UK time, we'll get the euro area inflation data as well. Look, markets are fully expecting that inflation is going to continue to subside in the Eurozone, and that gives the ECB space to cut. Traders expect potentially as much as 1% additional cuts coming through by the end of this year. We'll see if the inflation data adjusts that view. And at 3 p.m. UK time, as Valerie was mentioning, it is the US JOLTS data that comes out as we build out a picture by the end of this week, more clarity in terms of the labour market of the US with non-farm payrolls on Friday. Now, trade tensions between Beijing and Washington are ramping up after the US blacklisted Tencent and CATL for alleged links to the Chinese military. It's a bold move with implications that could be broad. The details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday, everyone. Now, shares in Tencent and CATL are plunging this morning. That's after the US blacklisted them for alleged links to the Chinese military in a surprise move, just weeks, of course, before Donald Trump takes office in the US. For more, let's bring in Asia EcoGov reporter Rebecca Choon-Wilkins for the details, the implications. Rebecca, just bring us up to speed on the latest blacklist and some really prominent names on this list. We mentioned a couple of them there, but also the shipping firm Costco and a major energy giant as well, backed by the Chinese state. What are the details?
Yeah, this news has actually really dominated Asian trading floors. And to be honest, Tom, a lot of these names, as you mentioned, actually have taken people by surprise. Some investors quite bemused, actually, by the inclusion of the likes of Tencent, which, of course, is a sort of generally considered to be a consumer-facing tech name, as well as CATL, you know, the car-making battery maker there. You know, it's important to note that the list, this Pentagon list of companies with these alleged links to the Chinese military, doesn't actually necessitate any kind of actual sanctions or immediate restrictions on these companies, but it is essentially a form of sort of discouragement to US entities and to US companies from dealing business or trading these names. So, you know, we'll really wait to see whether the long-term consequences follow through. Important to note that Tencent, among those other names, have pushed back quite firmly on this allegation. They say that their inclusion on this list is a mistake and that they are going to push back and trying to work with the DoD to have themselves removed.
Yeah, we've seen some examples, haven't we, in the past of Chinese firms successfully pursuing legal action and getting themselves removed from that list. Talk to us a little bit more then, Rebecca, about the equity market reaction to this news. You've talked about some market traders, some traders in the region feeling and being a little befuddled by this decision around, for example, Tencent. What is the broader read across the equity markets at this point?
Yeah, I mean, quite a sharp sell-off. I think Tencent around 7.5%, 8% down there, and CATL somewhere in the 3 to 4% down. And it goes for most of the names, really trading down. That is then weighing through and following through for both the onshore and offshore Chinese indexes, these key benchmarks. And it's mainly because, in fact, that Tencent, for example, is, you know, the heaviest weighting name in two of those key indexes that we monitor. CATL, again, another heavyweight, disproportionately represented on those indexes. So we are seeing that spillover effect into things like the CSI 300. We were already sort of in the red there. We had 4 days of declines basically since the beginning of 2025 for onshore trading. There's been quite a lot of pessimism. Now, countering that, just to put this into broader context, we do have this potential meeting tomorrow of these three sort of heavyweights of the authorities, including the MOF, for example, talking about this potential expansion and maybe some details of the expansion of the trade-in. This is sort of China's, you know, cash for clunkers with Chinese characteristics style program. So we have had sort of these reasons for optimism here and there, but by and large, quite a lot of concern about this expanded ways in which Chinese companies are really being caught in the crosshairs between US-China tensions.
OK. Asia EcoGov reporter Rebecca Choon-Wilkins, thank you very much indeed. Yeah, whether some of that domestic policy process and support can actually offset the international pressure that seems to continue, of course, and we'll see how that adjusts under the Trump administration. Coming up, AI has, of course, dominated tech developments in the past few years. That's an understatement. We'll take a look at what to expect from the technology in 2025. This is Bloomberg.
chips, data centres, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratise access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratize, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024, in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community, and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year. Annabelle Drulers, Bloomberg News.
OK, now some other news stories making headlines this Tuesday morning. Congress has certified Donald Trump's presidential election victory without dispute. That, of course, happened yesterday. His Democratic Party opponent, Kamala Harris, was presiding. The certification comes 4 years after a mob attack on the US Capitol marred the vote count with violence. The legacy of the events of 2021 saw extra security around Washington this time. Federal Reserve Vice Chair Michael Barr is planning to step down next month, more than a year before the end of his term. The decision bypasses a potential battle with President-elect Trump over his position. His departure raises questions about plans to force US banks to hold more capital to shield against losses and financial crises. The Fed says Barr intends to stay on as a member of the Board of Governors. Coming up, traders are dialing back their bets for ECB rate cuts this year. We'll discuss the outlook for inflation in Europe and the other risks ahead with Swiss Re's chief Europe economist. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks whipsaw after the Pentagon blacklists games company Tencent and battery maker CATL for alleged links to China's military. Nvidia unveils new chips and software to stay ahead in the race for AI supremacy. Asian semiconductor stocks surge, extending Wall Street's tech rally. And Canada's ruling party begins the search for a new leader. After Prime Minister Justin Trudeau steps down, former Bank of England boss Mark Carney says he is considering a run. Let's check in on the markets then. You have the optimism coming through from Nvidia, the new details around chips, the new details around software. Jensen Huang has spoken at CES. Our team on the ground will be interviewing him in the hours ahead. On the flip side, you have the surprise blacklisting then of companies like Tencent and CATL, sending a shockwave certainly through the markets in Asia. European futures currently pointing lower by 0.5% after gaining almost close to 1% yesterday. It was a solid day on Wall Street as well, with the Nasdaq 100 ending up with gains of more than 1%, the S&P closing higher by around 0.5%. FTSE 100 futures currently pointing low by 0.5%. So a weaker session being flagged for both Europe and the UK. Flip the board, cross asset. You are seeing money moving into the Treasury space. So yields taking a bit of a breather in terms of their climb higher. Currently down 2 basis points, 460 on the benchmark 10-year. Lisa Cook of the Fed saying, again, that caution needs to be the watchword in terms of future cuts from the Fed. The Japanese yen currently down about 0.1% versus the US dollar. You've had a bit of verbal intervention from the finance minister there. 157 on the currency versus the US dollar. $76 a barrel on Brent, largely unchanged in the session. And Bitcoin back above 100,000, currently up 0.2% so far in the session. Now to the eco data and a raft of inflation data from France, Italy and the wider euro area expected later today. The numbers are likely to remind ECB policymakers that while their 2% goal might now be in sight, it is not yet within reach. Let's bring in Bloomberg's Western Europe economy editor, Zoe Schneeweiss, for a preview. Zoe, the inflation data later today, is there how much concern will there be amongst the rank and file of the ECB when this data drops? Is this going to put a question mark over whether or not the ECB has vanquished inflation?
So, as you mentioned, there will be an uptick today. That is something that policymakers did predict, and Lagarde at the press conference in December did say that inflation was going to fluctuate in coming months. Overall, the uptick we see here is because of energy costs and because of a so-called base effect. A year ago, they were very low, which means that now they work in the other direction. Thing is, this won't hold very long. We were below 2% already earlier in 2024, like in September, October, we were below 2, and since then it's been inching up. Overall, this uptake obviously is not the news they want to hear. They want to be going to that 2%, but it is something they had expected. So I don't think there'll be too much concern today.
What is the expectation amongst economists and analysts then, Zoe, around the future rate path of this ECB?
So overall, there seems to be consensus that there are going to be 4 rate cuts, all of those 25 basis point cuts, so standard size cuts in the euro area at the first 4 meetings. So the ECB meets about every 6 to 7 weeks, which means that will take us through the June meeting. So we've got meetings in January, March, April, and then June. So that should get us to from currently the deposit rate of 3% to 2%. Of course, there are some uncertainties here, and one of those, of course, is Donald Trump and what he'll do on tariffs.
Well, you touched on Trump. That clearly a major risk potentially for the Eurozone. What are the other challenges out there that policymakers are going to be weighing up?
We're seeing very slow growth in the euro area. We've been seeing that now for a while. In particular, we've been seeing that in Germany, which has more or less flatlined or stagnated for the last 2 years. So those are things that obviously are a worry. And if the economy is too weak, that does impact inflation. We now face elections here in Germany on February 23rd, and that will almost certainly see a change in government. Scholz is not very popular, and it looks like Merz from the CDU will take over. Still, they'll need to form a coalition. The CDU, CSU, a pact group won't have enough votes on its own, so they will take a while to just get a government, implement policy. All that obviously is a deterrent to growth, creates uncertainty, and as we know, uncertainty is one of the things that never helps growth.
Yeah, well, indeed. OK, on some of the challenges going forward and preview of the data that will be dropping later today, Bloomberg's Western Europe economy editor, Zoe Schneeweiss, thank you very much indeed. Let's stay on Europe then, and we'll tie in some lines as well and some views and forecasts around the Fed. But let's start on Europe and bring in Charlotte Mueller, Chief European Economist at Swiss Re. Charlotte, thanks for joining us this morning. We saw some PMI data out of the Eurozone yesterday. Certainly when it comes to Spain, it seems to be a reminder that the Spanish performance in terms of the economy continues to outpace their rivals or at least their partners, their neighbours over in Germany and France. Are we starting to see any green shoots when it comes to the eco data of Europe?
Thanks. Happy New Year, first of all. If we look at Europe, I think there you can't really give a one blanket statement, but really it's the theme about divergence, where you have the periphery, for example, Spain, also Italy, Portugal doing much better than, for example, Germany or France. So it's quite a different situation to what we had in the financial crisis or even during the pandemic, where now the big problem is rather the core, say Germany there. If you look at the PMIs, we did have the overall composite also below 50, so in contractionary territory, again, largely driven by manufacturing. But if we look now towards the outlook for this year, we still see rather muted growth. So we have a 0.9% GDP growth forecast for Europe, for the Eurozone this year. That's less. So if we compare, for example, to the US, there in the US, we have more than double the growth rate. So again, really this European underperformance will continue. The one positive tailwind is potentially with more monetary policy easing, as also your previous colleague just mentioned on the show, that could add some supportive tailwinds. But overall, with trade uncertainty, also domestic policies that will weigh on the Eurozone.
Charlotte, on that divergence that you're seeing in Europe, that the data is confirming still, how much more complicated does that make the job of the ECB?
So I think overall, definitely it is complicated, but I think the main baseline view we do have is that with growth still overall weak, but also looking importantly at inflation, we do expect back-to-back rate cuts until June next year at least. So if you look at the Eurozone CPI data, yes, towards the end of last year, CPI did increase, and you're going to see it in this morning's numbers again for December. However, at the turn of this year, you're going to see quite a sharp reversal downwards in headline CPI, as also these energy base effects, like your colleague mentioned, they also drop out. And also you're going to see services inflation start to ease as also wage growth starts to moderate. So with that, I think the ECB is set for back-to-back rate cuts. We think the depot rate will be around 2% by June this year, and risks to that outlook are for even further rate cuts.
OK, so 2% this year and potentially below that by the end of this year, depending presumably on how the data comes through. And you're still seeing, your prediction, Charlotte, you and the team at Swiss Re, is still that you will continue to see this divergence between Europe and the US. And that's despite a more proactive ECB and potentially additional stimulus coming through from China.
Yes. So with that, I would say, so in Europe, I think one thing that we were hoping for last year was that you would see an increase in also private consumption as also real wage growth started to improve. But you didn't really see that. So I think still getting that consumer sentiment up is going to be a key ingredient as well for Europe. Then if you go to China, yes, we've had a lot of stimulus. The question is, how sustainable is the recovery going to be for China? And so there they also have a lot of structural domestic issues. So their signposts to watch are the property markets, and also longer-term structural issues such as their demographic issues, and also not to mention, of course, trade tensions that could also weigh regardless of how much stimulus they do get. So again, the story is that Europe and China continue to struggle in 2025, whereas then the US will be the key outperformer. The extent of that divergence will depend on the scope, timing, and also sequencing of potential policies from the US, specifically here thinking about tariffs.
Yeah, and you've got some views on tariffs. I mean, clearly there's a lot of uncertainty, and we were reminded of that in the last 48 hours in terms of the Washington Post reporting, then Trump pushing back on that, saying that he still plans those broad tariffs, and we'll see how that comes to play. But clearly tariffs are coming in some form. Talk to us about how you are starting to model the impact on some of their international partners, but also domestically for the US economy as well.
Yes, so I think their scenario monitoring is key in this environment. And there, what we would say is our baseline assumes some sort of escalatory tariffs, but they might be a bit more phased. And there, the impact will be more muted for the US, and rather the bigger pain will be rather for China. If you go into full-blown trade war, however, there you could have easily inflation, for example, CPI inflation in the US rise by 1 full percentage point, and also growth decline significantly. But for now, if you assume staged tariffs, there I would say also most of the pain will come probably rather in the second half of this year. And so the baseline, you would still have reasonable growth for the US.
Charlotte, before we let you go, we've seen another reminder in terms of the sell-off globally across these bond markets. We're seeing that in terms of US Treasuries and the 10-year. You're seeing it on the 30-year in the UK, where you're getting to levels 5.19 yesterday on the 30-year here in the UK. And we have an auction or a sale of UK debt later. But you're also seeing it in Japan as well. The higher yield story and the risk that poses, where are you watching in terms of those potential risks?
Yeah, so I would say, in terms of risk to watch, geopolitics, but also bond markets, and especially the rise in long-dated bond yields, not just in the US, but elsewhere. Why is that important? Because it can expose macro vulnerabilities. For example, in the US, I would say it could put pressure on mortgage rates, which I think could get increasing attention. I mean, and if you also just take a step back and look at what happened the last 6 months, you have the US 10-year bond yield that has risen 100 basis points since the Fed cut by 100 basis points since September. The only time historically that has happened was in 1981 under Volcker. So I don't think this is a direct rejection of Fed credibility yet. I think the story is more about, sticky inflation expectations with the new government coming, and also deficit concerns. But I think, this could be also a rising debate if the economy also starts to weaken a bit this year, say under trade tensions, but then inflation still stays sticky.
OK, excellent. Charlotte Mueller, the Chief European Economist at Swiss Re, on those bond yield and bond market risks, and a view around how the European economy and US economy evolves with, of course, monetary policy at the heart in and through this year. Later today, by the way, we're going to be speaking exclusively with Stéphane Séjourné, the EU's Commissioner for Prosperity and Industrial Strategy, on Europe's political and economic headwinds. France's new finance minister, meanwhile, is aiming to reduce the country's deficit more slowly after lawmakers rejected the previous government's plans. Eric Lombard told French radio he is targeting a deficit between 5 and 5.5%. He says the budget will contain around 50 billion euros of tax rises and spending cuts, 10 billion euros less than the last government's proposals. And Bloomberg has learned that senior figures in 3 of Britain's biggest political parties have privately urged Donald Trump's allies to reconsider his relationship with Elon Musk. This after the billionaire Tesla boss made a series of inflammatory remarks about UK politics, including calling for Prime Minister Keir Starmer to be imprisoned. In discussions with Trump's allies in recent days, some suggested that Musk's posts were damaging the incoming president's reputation, even among his supporters in Britain. Coming up, Justin Trudeau stepping down, but who will replace him? We're going to discuss what it means for Canada in today's Big Take as the country looks to be moving closer to a right-wing pivot. We'll see how that plays out, of course, in those elections expected later this year. There's more coming up. This is Bloomberg. Welcome back. So a major story for us today is the surprise blacklisting of a number of Chinese companies in terms of their linkages to the Pentagon. They've been put on a blacklist, being accused by the US, of course, of having ties to the Chinese military. One prominent name is Tencent, of course, the maker of the WeChat app, but also a major investor in gaming companies and a major gaming producer itself, but investor as well in US gaming companies. Currently, that stock is down 7.8%, briefly dropping 8% to session lows. So a big drop coming through for Tencent on the back of this news, and that is dragging stocks lower because of the weighting in terms of the HSI over in Hong Kong as well. So the ramifications being felt in terms of the traders' reaction to this story. CATL, another company as well, the major maker of electric vehicle batteries that has about a 37% market share and whose largest customer, interestingly, is Tesla, also in the firing lane, also on that blacklist. But Tencent is in focus right now, given the share drop that we are seeing for that business. A story we'll continue to cover for you through the next few hours. Back to Canadian politics right now, so a pivot. But Justin Trudeau's resignation as Canada's Prime Minister, not a major surprise, of course, after the events of the last few weeks, but it does set the stage for a dramatic shift, potentially in the country's economy, away from progressive policies and towards a more conservative approach. That is the subject of today's Bloomberg Big Take. For more, let's bring in Bloomberg's Jill Desis. Jill, let's start with what led to Trudeau's downfall, because one of the catalysts, one of the ingredients is one of the factors that led to the downfall of a number of prominent leaders amongst major nations. I'm thinking here in the UK of Rishi Sunak as well, and that's the question of inflation.
That's right, Tom. Ultimately, what you saw unfold in Canada is really not that different in some ways of a narrative to what we saw pretty much across the world last year. I mean, really, 2024 being the year of elections, nearly every major leader was either toppled out of government or lost significant support within his or her party, whether it be conservative or more progressive. And a lot of that really did have to do with that idea of a post-pandemic surge in inflation and sort of this inability to really sort of ultimately temper things. I mean, in Canada, you had people who, continued to see issues with really, really elevated grocery prices, even as we saw inflation kind of come down somewhat. Clearly, it wasn't enough. That's something that ultimately led to quite a lot of consternation, a lot of, unhappiness with Trudeau himself. But then really, I think in the last several weeks, we've seen that really exacerbated, where he's lost a lot of support within his own party. His finance minister, one of his most loyal advisors. She stepped aside over some disagreements, over some policies. We've seen kind of Trump really go on the attack against Trudeau, and that all kind of combined with, again, that issue of inflation and general economic dissatisfaction among the Canadian public is what ultimately led us to what we just saw overnight.
We have, of course, the question as to who replaces Justin Trudeau. Maybe you can touch on a couple of the key names. Mark Carney's in the list and it's suggested he's looking at that. But also, Jill, what this means then for policy in Canada, given the lead that the opposition Conservatives currently have in the polls.
Yes, that's right, Tom. So ultimately, what we're going to likely see here is some kind of jockeying for power among, leadership within Trudeau's party. So as you said, Mark Carney, Bloomberg chair, but also former Bank of England and Bank of Canada governor, certainly in the running there, as well as Friedland, the finance minister who resigned last month, just mentioned, along with the current minister. So you do have several prominent names within these, sort of progressive politics that are ultimately in the running there. But at the end of the day, the Conservatives were up pretty substantially in some opinion polling. There has to be an election that ultimately happens to replace Trudeau as Prime Minister sometime between April and October of this year. And it really is looking like the Conservatives are very, very likely to take that seat. That would lead to Pierre Poilievre. He's the Conservative Party leader, likely becoming Prime Minister. And under that kind of regime, you are likely to see much more conservative policies, sort of an abandonment of some of the more progressive policies around immigration and sort of carbon that Trudeau has really kind of, put forward here. And if you have somebody like Poilievre in this position, you are likely to also see somebody who's maybe trying to emulate a bit of that Trump strongman energy, is really concerned about immigration, the border, those kinds of things. So you are looking at a pretty fundamental shift in Canadian politics if, that trajectory kind of carries through to whenever this election happens to be.
OK, Bloomberg's Jill Desis on the potential significant shift in terms of policy and for the economy as well of Canada, dependent, of course, on how those elections unfold. And we look ahead to who is going to be the new leader, of course, of the Liberal Party, taking over from Justin Trudeau. Mark Carney, by the way, is, of course, chair of Bloomberg's board of directors, as Jill Desis mentioned. There's plenty more coming up. Stay with us. This is Bloomberg.
they're having trouble communicating how they're likely to react to the Trump policies. Obviously, if tariffs are broad-based, that is one effect. If they're much more targeted, as the Washington Post report suggests, that has a different implication. So there's a lot of uncertainty about what Trump policies are going to be.
Bloomberg opinion economist Bill Dudley there on the impact of Donald Trump's policies on the Fed, the uncertainty, of course, around how those tariffs will transpire. You had the Wall Street, or the Washington Post report, I should say, around potentially Trump considering, his team at least, moderating those tariffs. Then Trump came out and said, pushed back on that and denied that was the case. So again, the uncertainty around tariffs, maybe that's part of the plan as well. But what you're starting to see is that being priced into, of course, the bond markets. That's not a new phenomenon, but you've started to see that in terms of the yield or the premium. So the pricing that markets expect above, of course, the Fed's longer term rate coming through at the highest level now since 2015. Tax cuts, expectations around tax cuts, also part of the mix there. But it's led to, of course, that longer end of the Treasury curve sell-off and the premium now being demanded by traders at the highest level since about 2015 on concerns about the impact of tariffs as well. Let's flip the board and have a look at a similar story, different underpinnings, of course, but around the UK. And a reminder that you have seen yields run up as well in terms of gilts. We've got a big auction of 30-year later today. The 10-year, you've seen yields up 40 basis points since that October budget, and that pricing is still there. You are now seeing debt costs, borrowing costs, long-term here in the UK, about the highest levels in almost a quarter of a century. Pressure then on Chancellor Rachel Reeves as you see yields at that level. You're expected on the 30-year auction later today to see yields of around 5%. That's the first time since Gordon Brown was Chancellor, back in the late 1990s, early 2000s. Let's flip the board and have a look at the corporate story at the moment. It is Nvidia. Jensen Huang's given that speech at CES. You saw the stock closing in another record yesterday, close to a market cap of around 3.7 trillion. So closing in on those fresh records in terms of the biggest market cap company out there in the US listing, unveiling new products around chips, unveiling new software and partnerships with automakers like Toyota as well. We'll see how that stock reacts later today. And we have an interview, of course, with Jensen Huang coming up with Ed Ludlow later today. Tomorrow, though, at 5 p.m. UK time, we're going to speak exclusively with Gary Gensler as he prepares to leave his post as chair of the US SEC. That interview will be fascinating, given his views, of course, on crypto and whether or not he thinks he made a mistake on going too hard on that space, and the incoming Trump administration, of course, as well. Up next, though, it's the opening trades. They're coming up in the next couple of minutes. Stay with us. This is Bloomberg.